Hey guys, so Dan from Trading with Dan here. So this is the Bitcoin and Ethereum quick market update for Sunday the 8th of March 2020 for the DMT and the Dominator indicators. So yeah, you can see we finally got that DMT sell trade and it was pretty much straight down from the sell. So if you were still holding that position, you would be about, well, over 3% in profit. And then the Dominator, which took its sell basically around here. So if you're running the Dominator sell still, which is, sorry, this is the 15 minute, apologies, go to the 25 minute. Yeah, it was about the same price anyway. But yeah, the Dominator sell, which was it was before this this fake up and fake out and drop, I think. We can zoom in here, and it actually was on the sell candle, so it would have been around about the same level. So the Dominator as well, you'd be sitting about 3% profit. So that'd be great if you're still in them holding those positions. I actually took both those trades, was in both those trades, and then I did take profit. Probably a bit, well, it was a bit early last night before I had to go to bed. Mainly because I don't particularly trust weekend price action, and obviously we're gonna have a big gap in the CME, and I just think at any point we could spike back up there, and then it's game on again. And the previous time we had a big move over the weekend, I basically took I played the position, played the trade, took my profit before obviously before CME's opened, and then it did basically fill the gap pretty much straight away. So I was glad I did that last time, so I'm going to do it again this time, and it obviously may not work out for the best this time, but you're just going to keep doing what you do, managing your risk, how you want to manage it. So we have had quite a few trades since we had that last 0.7 loss. We actually had a Dominator long trade, which was a loss. It was before we sort of spiked up. So if I show you on the 25 minute, we had it here. So it did spike up a bit on side, and all that really did to help us out was it dragged our trading stop loss up a bit. So we only stopped out on about 2% loss. And then we had the Dominator short trade, which we in theory should still be running, but we're not. So we only took that percentage from that when we should be over 3. And then this DMT, which is actually the main size of the trades that I take now. The Dominator is on a smaller position size, but DMT is the main trade. So this is actually the next main trade that we had on DMT, which again is another good winning trade, and would be winning more if you were running it, and could potentially be going down a lot further as well. So that just shows to the how great the DMT indicator is. So I mean, these you can see they're all Dominator trades. The last DMT trade was this one, and then this one, and then this one, and then this one. So you can see they're all green. I'll go to the next page so we don't look like I'm trying to scam the back test. Look, this one again is a good win, and then we did have a loss. That was actually on Ethereum, but then we did stop trading Ethereum because of the volatility. So that we wouldn't get that again. Not that trade if we'd basically got rid of Ethereum. Then DMT win there, that was a scratch. DMT win there, and then our first loss that we started off on. So you can see DMT is very good. I'm obviously trying to diversify the bot strategies a bit by putting this Dominator in, and there are times when, I mean, overall the Dominator is up. If you look, our first Dominator trade was here, so we're slightly up here. Oh wait a minute, are we down overall? Yeah, we're actually going to be down a bit on these Dominators, so we're only ever so slightly up, and then more down, then more down, and then yeah, so we're actually down overall. So yeah, so I mean, that's what we've got to test it really. This is why we're trading it in a lot smaller position size than the DMT, because we're in the testing periods. But we would probably be up though if we were still running this rest of this trade. So yeah, but obviously we can't do it. I mean, there's no point in massaging figures and stuff like that, is there? But yeah, so we're still obviously going down here. I mean, there's the same support again around 8,500 level that we spoke about before, but we are coming down pretty fast. So it's going to be difficult to like have a V-shaped bounce back there, but we might play out that range a bit longer. Or we may just gap up, CME futures open, and gap back up, and then not a gap up, but we've got a gap down, but then trade back up. So yeah, we've got to basically see how this market's going to play out. So 25-minute time frame, you can see we're a long way from a dominator buy there. It's not even shown on the 20, 15. It may be starting to show on the 10. Yeah, just the 10. The 10-minute dominator's fit to a buy, but this looks like it's going to go back to a sell anyway. So yeah, we're selling off a bit here as well. Look, you can see it's a shame that I yeah, had to go to bed and didn't want to leave that trade on for like today, otherwise it would be in significant profit now. Let's have a look at from this is the 15-minute DMT sell line. So here we'll be currently at 3.5% gain. So yeah, but we will see how this market plays out. Over to Ethereum. Ethereum is basically the same trades. We had our dominator sell, and then a buy and then a sell again, but then the sell obviously came down quite a bit. But it's flip-flopping around on the 50. Sorry, we're on the 15 minutes, so ignore that. We'll go to the 25 to look at the dominator. But we had the DMT sell, and that for a change for Ethereum was straight down. So that is a good DMT 15-minute trade in Ethereum. We're not taking them, but that's 4%. But obviously Ethereum's more volatile. But oh yeah, sorry. So over the 25-minute for dominator. So we did get the sell here. And then from the dominator sell level on Ethereum, the 25-minute that if we're going to set it up, we're going to use, we're about 6%. So yeah, so good Ethereum trades there if we had them on. There's no reason why anyone that wants to play those can't have them on. I'm just not at the moment. So yeah, so overall maybe got like another % worth of gains. We're on what we're on, what's 8.18% overall. So yeah, so this is since the 11th, so we've got a couple more days and then we'll have the whole first full month's result from the bot trading. Bearing in mind it's been a lot of trial and error, working out settings, working out which trades we're gonna use, what markets we're gonna use with it. So I do feel that we can push on and increase our percentage results going forwards by always adjusting and just playing around with the settings as we get more information. So yeah, so right, so yeah, so like I said, guys, I think we possibly might obviously go up. We may just leave a CME gap anyway for a while, and then just keep selling lower. We have been closing a lot of gaps, so I kind of feel like we're about due not closing one for a while. Do you know what I mean? I mean, you can look into that how you will. I mean, we can't trade based on feelings, but I wouldn't be surprised if this one gets left behind, because I do think Bitcoin does want to go down at least to like the mid 7,500s. So I feel like it's fine for us to leave this gap in the market, because when we eventually do find the bottom, then maybe rally because of the halving or something, I think we'll easily close that gap then. So there's no imminent reason to close it first thing, well, Monday morning, first thing CME opens, but we will see. But right, so yeah, thanks for listening, guys. Yeah, so remember what I said about the normal markets. Oil closed at 41.48, which is, I mean, that is below a long term 42 level of long term support. I'll try and show you this real quick. 1 second, we'll go to a weekly. Yes, you can see here, these are the levels, and I know this may look only just under it, but these are obviously weekly charts, so you've got to bear in mind that's still quite a bit far under, because look, these bottoms there at 42.41, and we're basically a full $1 lower than that, and $1 on a $41 asset. It's quite a high percentage. So yeah, so we're below this, and yeah, I mean, there's nothing but air until the next level at $26. And I think I did say to you guys, didn't I? I said we probably are going to see sub $30 oil with basically a 2 handle. Yeah, so we've got interesting times to come. I mean, I can't see any of this getting turned around. I mean, just pretend manipulated nominal values of like things maybe can get increased, like of stocks and things, if they just buy back like they're manipulating bond markets and stock markets anyway. But things like an actual fully hard asset commodity that comes out of the ground, oil, it's difficult for that to be manipulated to a certain level, because all you're doing then is just gifting oil producers money, so they will just then not cut their production and then increase it, and then I mean it's just ridiculous. But these are the ridiculous world we live in these days. All markets are either manipulated, controlled, or suppressed, and something has got to give. And I think we are definitely in the start of a multi-year bear market. Another indicator I like to use is TD sequential, and on the TD sequential for the Dow Jones, we are actually on a yearly 9 candle, and often markets top out on 9 candles. If you know how that indicator works, it's one that Tone Bays likes to use. But yeah, so a yearly 9 candle does suggest we have potentially 1 to 4 years of correction in stocks. So yeah, 4 year up to 4 year recession. I mean, and that 1 to 4, it can just carry on to lead to a full 9 count, which is obviously 9 years. So yeah, it's just some anecdotal information there for you. I don't read into that what you wish. And then one last other thing is we have pretty much priced in another 50%, 50 basis point Fed cut. So what that means is that within less than a month of stock market highs, all-time highs, good job numbers, stocks only off 10% ish off those highs. We're looking at basically 100% cut. So I mean that basically is panic. That's basically the Fed's just lost the plot. They just know they can't do anything in reality, so they may as well just try to get ahead of the curve, preempt what's going to happen, just do the cuts first, because they know if they wait to react, they can't do anything. So they probably know they can't really do anything if they're proactive, but there's no harm in trying, is there? Well, there's no harm. There's that they might as well try. I don't know what harm. Well, there is obviously isn't a harm. There's obviously harm to savers. So anyway, so thanks for listening, guys, and I will have another update tomorrow morning. So next week I think it's gonna be pretty interesting in Bitcoin, because I've been saying for a while, I've been worrying for Bitcoin, because I don't think it can hold up how it's going with stock markets doing what they're doing. I don't see any light at the end of the tunnel at the moment for stock markets. So I think we're going to be a case of rallies in stock markets need to be sold, rallies in Bitcoin maybe need to be sold, dips in gold need to be bought, and that's about it really. I think if you just stuck to those rules for the next 1 to 4 years, then yeah, maybe doing all right. Right, I'll speak to you guys soon. Remember, not a financial advisor, not a financial right, so remember, no, this is not financial advice. I'm not a financial advisor, and I will speak to you guys soon.